Typically a $340 million deal, no offense, not very large. Why should we care?
Look, this deal is bigger than it appears. If you look at it, it's a very differentiated asset in the marketplace. It fits Viacom's strategy on a number of levels, and when we look at it, we think it has a tremendous financial expression.
Well, it fits your strategies in what ways? What do you mean? Specific in answering this to streaming, explain the strategy. So
let's start with the differentiated asset. This is an asset, in some respects, we're zigging as everyone's zagging, right? This is an asset that doesn't play in the SVOD space, subscription on demand, plays in the AVOD space. So it's ad-supported. It's the largest free streaming TV service in the US. I've talked about the fact that the market is segmenting over the years, including with you. This product appeals to that entry-level free segment. So, and that's a big market. You look at the ad projections for current time, that's an $8 billion ad market, projected to grow to $15 billion by 2023. So big, high growth. And when you look at the asset itself, it's differentiated from a consumer perspective. It presents content in a very channel-driven way. It has about 100 channels, so very familiar to consumers, but also has an on-demand option with over 5,000 hours. So really cool asset playing in a very specific and different place.
Our parent company also has plans to introduce a largely ad-supported streaming service in 2020, I believe, that being NBC, of course. It occurs to me that we seem to be going back to a time when TV was free and you put your aerial up and you're able to get stuff free. Are we?
Well, again, we're going into a world, in fact, we're already there, where the market's segmenting. The vast majority of subscribers continue to be at the high price point, basic cable sector. We have more mid-price point, $40, $45 segments. You got SVOD players now in the teens, and then, of course, you got free. So what you're seeing is fragmentation. Again, this place here. From a Viacom strategy standpoint, we love how this fits in. It's a scale D2C play to us. Over 12 million monthly active users as of the end of the year, and that's both a standalone opportunity and an opportunity to upsell our niche SVOD products like Noggin,
but does it accelerate the deterioration in your subscription business? I mean, for example, you have a large deal coming up with AT&T, DirecTV, not too long from now. People are worried about that. They say, there's no way they're going to take all those Viacom channels. Does this accelerate, in a sense, their willingness to say, no, our subscribers can get it on this?
But that's the really cool thing about this, because it's both a D2C play, as I explained, but also it's an integral part of our core business. So on the distribution side, as you know, over the last 2 years, we broadened what we do with distributors. We not only license them linear content and on-demand, we now have advanced advertising partnerships with the biggest distributors in the country, and in some cases, I've entered into co-productions. Now you bring Pluto to the table. This is an ad-supported platform that we can work with them with their broadband-only subs. So now we can walk across the whole sub base, and we think that's tremendously exciting and really the next leg in our distribution strategy, and it's key to moving forward.
When you look at the what people go to, how much of what they go to is that trending column on the right-hand side?
Well, you look at Pluto, it has a broad range of content. In fact, CNBC is on Pluto today, not in 2020. So you got news, you got sports, you got general entertainment. Movies are really big on it. Batman Returns, as an example, recently a big source of consumption on Pluto. So wide variety of content. It's not concentrated in any one particular way. But what I will say about it is the user base is nice and young. Over half of it is 18 and 34. That's a very attractive audience. It's clearly supplemental and incremental to the viewership of core basic, which, by the way, is also why it reinforces another important area of our strategy, which is our advanced marketing solutions. These are billions of impressions we get out of the gate and really helps us drive growth in that critical area.
And I would assume, as other rivals hike prices, that extends your window of opportunity at that part of the spectrum?
Absolutely. Look, this is a great product for value-conscious consumers. Works for broadband-only homes in wired, cable. But by the way, great mobile product too. So we see tremendous potential with this asset.
So, but I'm trying to understand, when we look out, as we know these trends are continuing, what Viacom is going to look like in terms of where you're actually getting your revenues from, and whether the dollars today will still be dollars tomorrow, or will they be quarters, nickels, and dimes?
So look, Viacom's story of a turnaround and an evolution. We really cemented the turnaround last year. Now we're leaning hard in 2019 into evolution. We're taking these flagship brands and having them live in more places. Some of those places are owned and operated platforms. Some of these are third-party partner relationships. Pluto is an example of an incremental owned and operated platform, which we think we can create tremendous value. So it's really the Viacom of the future, if you will, is one where we're leveraging this IP in more and more places. And importantly, that's fundamental to what we also did. We started it in the fourth quarter where we returned the company to revenue growth and OI growth. You look at 19, we'll have total company revenue growth and OI growth. So it's an exciting time at Viacom, and Pluto is really the next piece of the story.
You know,
So, okay, sorry.
I wonder, when I lived in LA, was involved with, in the 70s, there was Paramount and then there was everybody else. You wanted to work for Paramount. Paramount was the best. And then I don't know what the heck happened, Bob, but I mean, look, I like the Mission Impossible series, and obviously A Quiet Place was good, but what the heck is Paramount really worth, and what's in there? Like, if I go to the bowels of Paramount, do I see stuff that I want to watch, and you can put it on Pluto?
So absolutely. So Paramount is an iconic Hollywood studio in the midst of a creative resurgence, both on the film side. It has a very high growth television business. That business in television will go from 400 million in 18, it'll be over 600 million in 19. It's not just delivering revenues, it's delivering hits, whether it's Jack Ryan or 13 Reasons Why or House on Hill, and a broad set of customers, whether it's streamers, traditional folks, in-house Viacom. And so Paramount, really, look, the mountain is back. We put a whole new management team in there led by Jim Giannopoulos. We delivered 7 straight quarters of OI improvement. We're tremendously excited about the 19 slate. Next film up in early February is What Men Want, which is our second BET branded film. It takes that great film, What Women Want, redoes it for the current day in African American and flips the sexes on the other side. And it's hilarious. So tremendously excited about Paramount. The mountain's back.
So when the Times does a big piece on Paramount and it ends with Diller asking the reporter, why are you calling about Paramount? It's irrelevant. What do you say?
Look, everyone's entitled to their opinion. I think that article just illustrated what bad shape Paramount was in 2 years ago, and it had a whole set of challenges. Again, it's in a much better place today. It has great momentum. It's a place that people in Hollywood want to bring projects, whether it's film or television, and the road ahead is very exciting.
You know, like a lot of people, though, Bob, and investors, you struggle to understand, okay, what is this world going to look like? You mentioned demographics. You skew younger to a certain extent on a lot of your offerings. That show You was on Lifetime recently, didn't get any viewership. It went to Netflix, and it became an enormous hit. There are younger people who view Netflix as the TV ecosystem. Is that a threat to you or an advantage?
Well, as I say, we're living in this multi-platform world, and that's one of the things we've been focusing on, evolving Viacom to better serve. And this Pluto acquisition is a great step in that direction. It brings significant incremental younger audience. Again, 12 million monthly active users today. It's very high growth, grew 3 million in the last quarter. And if you look at the deals they have in place for distribution with Vizio, with Samsung, with a large MVPD that's yet to be announced, this thing has real tailwinds, and it's going to really increase the composition of young viewers that Viacom is serving circa 2019.
All right, those smart TV viewers. Real quickly, ad sales right now doing okay? How's the market? Because it can be.
Yeah, we like the market. Demand's strong. Biggest problem we have is not enough inventory to sell, and again, that's where Pluto comes in. Billions of impressions day one, very lightly sold inventory, so big upside potential.